Steve Wyett is an investment strategist with Bank of Oklahoma. Now, before you say, oh, I can't understand that, well, stick around because he makes it easy to understand. Steve, good to have you.
Sam, thank you. I appreciate it, and it's glad to be back.
Let folks know that, first of all, just because you've got money invested doesn't mean you're going to pay taxes on it this year or next. You only pay taxes on it when you take it out and start playing with it, don't you?
Well, if you're certainly when you sell something, if you make money on it, that's when you're going to pay tax on it. But if you're buying an investment and you're holding it and it's going up in value, but you haven't done a transaction, then that's correct. You don't pay taxes on that increased value. It's only when you recognize that increase in the value.
You know the current flavor of economics in Oklahoma and around the nation. You got your finger on the pulse. Is this a good time to invest?
What I would say, Sam, is it's always a good time to invest, and I don't mean to be flippant about that, but certainly the economy goes through cycles, and we've seen periods of time where the markets have done better than others. But what we also know is that over time, if you've got to be in the market to be there when times are good. And if we just want to talk about 2024 in particular, as we think about moving into this year, we're optimistic on economic growth. We were cautious last year and frankly thought the economy would struggle a little bit as the Fed really raised rates a lot over the last year. The last time you and I were on, we were talking about inflation, which was running pretty high. It's continued to come down. Now it looks like the Fed might be able to start to lower interest rates as we move through 2024. Sam, it's an election year. That probably means that we're going to see continued federal spending. Short run, that's going to be additive to growth. Longer term, Sam, you're looking at what we're doing from a fiscal standpoint, and it raises some questions as we think about moving on into maybe in the next 2 or 3 years. But for the next 12 months, we think the economy looks pretty good, and we anticipate that the markets will end higher, stock markets will end higher in 2024 than where we are today.
I just read that the Fed is trying to make a decision. They may have already made it, I don't know, but on what to do about interest rates. Which way would you like to see them go?
Well, I don't know if it's a question of which way I would like to see them go. We have an opinion on which way we think they are going to go as we move forward. So the Fed did just meet in December, and they provided an outlook for 2024 that as many as 3 interest rate cuts. And the reason that they're thinking about that is inflation is coming down. Now, we got a new CPI number out, that's the Consumer Price Index. That came out today. It actually was a little bit higher than what we were thinking that it was going to be. But it was back in the summer of 2022, inflation peaked at like 9%. It's at 3.4 to 3.5% now, so much lower. The good news is that that's going the right direction. The hard part, Sam, is that doesn't mean prices are going down.
Sure.
They're just going up more slowly. And the aggregate level of price increase since we kind of went through the pandemic, it's still hard on consumers. We're up like 20% on the CPI.
Groceries are out.
Absolutely. Car insurance, rents are higher, groceries, we go to the grocery store, we see it. We're getting a bit of a break at the pump. Gasoline prices have been relatively contained over the last few months, but just the overall aggregate price level, it's a lot more expensive.
I saw
now
where
than it was a couple
Arnold
years ago.
Schwarzenegger is driving an electric Hummer. I went, really?
Well, that's kind of almost there's a cognitive dissonance there, isn't there, on what he's actually trying to accomplish there. That's right.
I don't have a clue. I don't know about him anyway. If we were to take, and let's say we had an investment of $10,000, and we were wanting to put it in an area where investments would be reasonably solid. Now I know that, and this is really an unfair question, but I know that there is no such thing as you're going to make money with this. What would you personally recommend?
Well, you're right. It's hard to just make a blanket statement and say that what somebody does with $10,000 is what everybody should do with $10,000. Here's been one of the good things, though, about as the Fed raised interest rates, Sam. It has allowed us now for like CDs or short-term treasuries that don't lose money, that mature over a relatively short period of time and are considered to be highly safe. You can make money on those 5% type returns, money market returns, where it's $1 in and $1 out on a daily basis, 5% type return. So that's been an advantage. Savers for the last 15 years have been getting virtually nothing on their short-term investments, and that's forced investors to have to take more risk. So this is where, as we think about what we're doing now, this environment that we're in, where interest rates are a little bit higher, it does present some opportunities to maybe not have to take as much risk to seek ways to make money. I can invest my money in short-term, high-quality Treasury, high-quality municipal bonds, even in money market accounts, and still earn 5% or more on my money. And that's a real that's a positive change that we've seen.
Steve, thank you.
My pleasure, Sam. Thank you for having me. I
Appreciate you
look forward to coming
by.
back.
The invitation's open down the road. All right?
Love to be back. Thank you.
We're all out of time. Survive the weather, folks. It's going to get ugly. We'll see you next time.